Hello sector watchers, welcome to the show. This is the 140th episode of Sector Spotlight for Tuesday the 16th of August, recording it on Monday the 15th. My name is Julius de Kempenaer and I am presenting to you from Amsterdam in the Netherlands. For today we will have a look at last week's rotations in asset classes. We'll very briefly look at the rotations in sectors. And we're going to do a deep dive in how you can use intraday RRGs and how you can align the different time frames. Ladies and gentlemen, this is Sector Spotlight. Last week we had a very extensive overview of all the sectors and not so much about asset classes. So for this week I'm starting again with the asset classes and try to give a quick overview of what's going on there. And on the right hand side we have the weekly RRG, which still has DJP and GSG, the commodity tails, rapidly moving towards lagging. They are continuing lower. They're continuing to lose relative strength at a rapid pace. Look at those long tails. And if I look at the where they are on the daily, you can see DJP rolled over and is heading down, and GSG made a very weird hook here, but it's the lowest on the RS ratio. So I'm not expecting a lot of support from the daily RRG anytime soon, and that means that we have to expect that those tails will continue towards the lagging quadrant, and that means that I think that the pickup in commodities, which have turned around their long-term downtrend, may take a little bit longer than originally anticipated. So they're still strong, but we probably will get a better entry point sometime in the future. If we look at the, sorry, wrong one. If we look at the weekly RRG for the other asset classes, then we see that the US dollar is still very strong, although going through some sort of a setback, as we've seen for the last few weeks. We see SPY and V&Q risk assets moving higher on the RS momentum scale, not so much on the RS ratio scale. So from this longer term perspective, I still have to conclude that bonds are, in a relative uptrend, but the move is counter trend. So SPY looks to be picking up and taking over, and if we bring that to the to the daily RRG, then you can see that SPY is inside the leading quadrant, rolling over since last Thursday, and government bonds are inside lagging, but they're curling up a little bit. So you see there is a bit of a contradiction going on between those tails, and that despite the rally that we're seeing in SPY, that keeps me on my toes. I'm not entirely sure what's going on here. The picture is not very clear. And when the picture is not very clear, it's clouded. And it means there's something going on under the hood, which I haven't yet figured out. Maybe there are other people who have, but I don't trust this rally in SPY as of yet. And let me bring that back on the screen. No, first I go watch at euro dollar, because we've seen that dollar strength caused weakness in SPY. We saw that when the dollar started to strengthen, which means that euro dollar is going down, we saw SPY going down. And over the last few weeks, since June, the euro got stronger and the dollar weakened. And that matched the rally in SPY. It sort of connects with that rally in euro dollar. And what we see here is that, well, especially today, you see that the euro dollar, so the dollar is strengthening again, euro dollar is coming down, and we need a little bit more, but when we can break that trend line, when we can break below that 101 level, I think that we will see a new leg down in euro dollar. And then the question is, how will SPY react to that? If we look at the weekly chart of SPY, there's no doubt that this downtrend has been broken. There is no series of lower highs and lower lows anymore. However, there's also not a series of higher highs and higher lows. So it doesn't mean, the end of a downtrend doesn't necessarily mean immediately the start of a new uptrend. Because what we have here is a first higher high. We don't know yet where it will be, but it'll be higher than 415.6. That's a guarantee. So what will happen next in this high-low rotation will dictate whether we will be moving sideways, whether we will be resuming the downtrend, or if we put into place a higher low, whether we will start a new uptrend. For me, it's too early to call that yet, but I'm watching it like a hawk. In combination with that euro-dollar chart, but also in combination with the daily chart of SPY, where you see that there is still a lot of overhead resistance. Yes, this is a strong chart. Yes, it's moving higher and higher, and it's breaking above resistance levels. That's a sign of strength. But from the longer term perspective, I have not seen a higher low being put into place yet at the weekly time frame. So I don't think we will see this rally taking off without looking back. I think we will get some sort of a setback, and that'll be the time when we need to be alert and try to signal, if possible, that new higher low on the weekly time frame. That's the time frame I'm trying to track here. So that's my take on SPY, on asset class rotation. Now, because I have already recorded the rest of the show, I know that I only have a few minutes left to talk about sectors. So what I want to do is point you to an article that I wrote last week, at the end of last week, which is titled "Only Two Sectors Are Leading the Charge." And the view that I put there is still very much in play. And what it means is that I'm looking at the weekly RRG, where I see that XLY and XLK, together about 40% of the market capitalization, are the only two sectors at a positive heading, inside or close to crossing over into the leading quadrant. Because of the balance that we need to have in the RRG, it means that a lot of the other sectors need to be moving in the opposite direction or be opposite XLY and XLK. If you then look inside XLY and XLK to the individual charts, which is what I'm doing in the article, then you will find that there are only a handful of stocks inside those sectors that are really making a difference. No surprise, they're like Apple, Amazon, Tesla, those kinds of stocks. They are carrying the market. So from my RRG breadth point of view, if you wish, I think that this rally is still very narrow based, and that makes me quite cautious about being all out bullish again for this market. It'll come back, but maybe not now. I don't think it's gonna go straight up from here. I think we need at least one more test of the lows, or we need to put a higher low into place. And if you look at the daily RRG, which we have on the right hand side here, then you see that XLK and XLY are also already rotating from leading back to weakening. Now combine that with what you see here on those weekly tails, it's difficult. It's not a very clear picture, and when in doubt, stay out, don't overtake. You know all the synonyms, you know all the analogies, and that's what it is. So inside XLK and XLY, there's a couple of few good stocks that are carrying the market higher right now. There are definitely some interesting individual plays, but from the bigger picture, I am still very cautious, and I'd like to, I don't want to be fully invested, let me put it like that. Anyway, I want to leave it at this for the sectors. We're gonna move ahead and look at intraday RRGs and how to interact with them and interpret hourlies versus 30 minutes versus daily versus weeklies. Next week, we'll for sure talk a lot more about the sectors again. Following the introduction of the intraday timeframes for RRGs on StockCharts.com. I did receive a few questions asking how to read or how to use those intraday timeframes. And my answer is actually just the same way as you are using or as you would use the end of day time frame. So the daily, until now we only had dailies and weeklies. And there is in the chart school, there is documentation on how to, what's the difference between daily and weekly RRGs. And if you go to that section, weekly versus daily, it'll explain to you what the difference is between a daily and a weekly RRG. And I do that via the comparison of a weekly and a daily price chart. Because essentially an RRG, a relative rotation graph, is a type of graph. And it doesn't, in that respect, it doesn't differ too much from a regular price chart. That's why I also always have a bit of a problem answering the question, what are the signals on an RRG chart? When do I buy? When do I sell? And it's the same as asking the question on when would you buy and sell on a price chart, on a candle chart or a bar chart. It's different for a lot of people. There's a few pointers, a few general ideas, but the way people interact with price charts, with regular price charts, is quite different from investor to investor, from time frame to time frame. And RRGs, in essence, are not much different. I think that the most important thing to keep in mind is the definition of an RRG. It shows you trends in relative strength for an entire universe against the benchmark and against each other. That's where the power is. That's why they're so powerful, because they'll give you the big picture in one picture. Other than that, everybody reads them different. And I can tell you that from the start, when RRGs became more popular, first when they were launched on Bloomberg and later when they were launched on StockCharts, I've got mails and messages and discussions with people using RRGs in ways that I had never anticipated doing, but they were very interesting. So I still keep an open mind when people come to me and say, hey, I'm doing it like this. Is that the correct way to do it? And very often, well, not very often, but sometimes it's a way of looking at things which I had not thought about yet. And when I see it, I think, hey, that's actually not too bad. It makes total sense. So if you're interested in how to explain the difference between weekly and daily, you can go to that chart school article. And if we go back to the usage of intraday timeframes on an RRG, the story is not much different. So here we have the weekly and the daily. And you may know that sometimes I try to overlay the two. I try to use them in comparison. It's the same way as if I would use a weekly and a daily price chart. So I would look for the big trend on the weekly and I would try to see if my daily trend fits in or is in sync, in unison with what I see on the weekly. And I do the same with RRGs. So on the left-hand side, we have the weekly RRG. On the right-hand side, we have the daily. And I would just simply go over some of the tails to see whether they are in unison or whether they are contradicting. So XLK is the top here, is the first one. It's just entered the leading quadrant. And now I have to look for XLK on the daily. And you can see that on the daily, it's already rotated into the weakening quadrant, and that is that puts me, the way I look at it is that, hey, that tail on the weekly is actually showing strength, but on the daily it suggests that the party is already over. It's already rotating back towards weakening, and we have just entered the leading quadrant on the weekly. that tells me that we probably need a little bit more. So with the bigger trend being XLK moving into the leading quadrant, I would now start to monitor the tail of XLK to actually curl back up in weakening and start to confirm what we see on that weekly trend. That would be a good sign for me. That would be a good buying opportunity or signal to have a better look at the technology sector. How did that go about? So if we look back here, then you can see that that daily actually started moving here. This is July 15th. And if we go back to, that's 1 month, July 15th, that's this week here, then you can see that technology was already at a strong heading, inside improving. So at that point in time, I'd say, hey, now the daily is pushing into, pushing into the leading quadrant, and the weekly is on the rise. So that would be the daily and the weekly to move in tandem, in unison. And that would be a good sign. And right now, we're about a couple of weeks later, and you can see that the daily tail has done its work and is now down there. So a lot has happened in that month of trading for XLK. Now, how would we do that on an intraday time frame? Pretty much the same way. I would probably switch this to daily, which would give me this chart here. And then on the intraday, depends a little bit on your preference. I would prefer, I think, in stocks, the hourly or the 30-minute time frame. So let's start with the 60-minute time frame. That's 6.5 hours in a day. So 5 periods, 6 periods, that would be 1 day of trading. So what you see on this chart here is 1 day of trading on an RRG. And it's quite interesting because you can actually see that, you know, it looks like a normal RRG. If you wouldn't know it was a 60-minute chart, you probably would never have guessed that you're looking at an hourly RRG. So in that sense, it's the same as regular charts. You know, if you take away the price and you take away the time scale and you show someone a bar chart, they probably can't tell you, whether 99% of people can't tell you whether they're looking at a daily, a weekly, an hourly, or a monthly chart. Because it's just, you know, a number of bars in a row. RRGs are no different. They're a number of tails on a canvas. And you wouldn't be able to tell whether that's a 60-minute or a daily or a 30-minute or a weekly RRG. So that's the same. So how would we interact with that daily and that hourly chart? Let's see what we find here on this hourly chart, on this daily chart, because that's our big trend. Let's see if we can find anything that's interesting enough to look at. So here, this financials, maybe you're wondering why I'm not looking at XLC. It's interesting, but it's too vertical for me, and it's too low on the RS ratio scale. So I'm not yet interested in XLC. But I am interested in XLF, because on the daily, it actually is curling back up. It's pretty close to crossing over to the 100 level on the RS ratio scale. It's pretty close to crossing over into the leading quadrant. So I want to see what's happening on an intraday level on the hourly chart. So now we have to find XLF here, and you can see that it is actually inside weakening and it's heading towards the lagging quadrant. It's a bit disappointing. However, you know that when something curls back inside weakening and back up, that's strength. That shows a strong trend. So XLF still has the possibility to curl back up inside that weakening quadrant, back up to leading, and then get back in sync with the daily tail for XLF on the daily RRG. So seeing this now has alerted me that I need to continue watching the financial sector on the hourly RRG to see whether it starts to curl back up and move towards the leading quadrant. If you want to be a little bit more aggressive, then you can go to the 30-minute time frame, which is 6, 12, 13 periods on a days of trading. And I'm going to chop off the XLE here because it distorts my image. So now I want to look at financials, and they are here. And I want to look at 13 periods because that's an entire day of trading. And you can see that it is inside lagging and starting to curl up. Remember, the hourly, it was still here. So with the 30-minute already starting to curl up, I'm starting to think that, hey, on that hourly RRG, if this strength of momentum translates over into the hourly RRG, there is a very good chance that we get that curling back up towards the leading quadrant, getting back into sync with the daily RRG. So this reinforces my idea that I need to continue watching XLF to see whether that hourly starts to pick up. Or if I'm very aggressive, I can say, hey, we're already doing that. Makes sense to take a closer look at XLF. And of course, you can always do that by simply opening up the price chart and figuring out what to do here. So if we look at the daily, then we can see that XLF is now actually trying to fight with that resistance around 35.5, maybe 36. That is the resistance zone. And if that breaks, that would be an interesting signal. How aggressive do you want to be? I don't know. With the intraday timeframes available, it makes total sense to bring this into a 60-minute chart and have the same values of RRG coming in there. And what you can see here is that the hourly RRG is rolling over. That's what we saw on this RRG here, where XLF is now inside weakening. Let me put this on the other side so it makes more sense for you to see. And you can see that we're at 100.2, which is right there, and 99.76, which is right there. So this is how you can align your hourly price chart with an hourly RRG. Looks like we are rolling over. If you look at the hourly, the 30-minute charts, we saw that it was already curling up a little bit. And that is how you can try to actually paint a picture for yourself to trade at shorter term time frames than we were used to with the RRGs that were only available on daily and weekly RRGs. So I hope that I made clear that the interpretation of intraday timeframes on an RRG are not much different than the interpretation of RRGs on the weekly and the daily timeframes. It's similar. And what I try to do is I try to align them. I try to find two time frames that with a longer and a shorter and align them, which makes sense for your personal investment horizon. The only thing that you need to take into account, or what I found and what I think is, and you can see it here, that obviously the differences in price swings are much smaller on the intraday time frames. Here on the daily, let me rank that on performance, you can see that XLF made 5.6% over the last 5 trading days, and the lowest sector was healthcare with 1.9%. Those are very, very tradable percentages. If you look at the hourly, and here we have 60 minutes, 13 days, that's about 2 days worth of trading. And you can see that the price change here is 2.6% at the top for discretionary and -1 for energy. That would be, it's not much, but it's still tradable. But you can imagine that the shorter you make that, that horizon, the smaller your percentages get. And you've got to question yourself whether those numbers are big enough for you to make money off the difference, because in the end of the day, you make money off the difference of the price move from time A when you buy or sell to time B when you cover or close out a position. Obviously, when you trade leveraged products like options or futures, that is a game changer for intraday trading, because a very small percentage move using a leveraged product can actually make that a very decent return. That's why a lot of leveraged product traders are using intraday timeframes, because they're trading much faster because of the leverage. Anyway, I hope I have been able to shed some light on the use of intraday timeframes on RRGs, how you can use them as an interaction, and how you can use them with a link to your normal price charts and to your investment horizon. Love to hear your thoughts, love to hear your ideas. You know where to find me. Don't hesitate to send me any of your ideas. And that wraps up Sector Spotlight for this week. Thank you for watching. Please remember, Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. Hope to see you again next week at a new episode of Sector Spotlight. Same time, same place.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.